sensua eterni,
et di sensua eterni,
orda nostra solum tibi,
orda nostra solum tibi,
et di sensua eterni,
et di sensua eterni,
vida nostra solum tibi.
Hello, everyone. This is General Romulus. Welcome to our show. Excited to have you, and we definitely have a lot to talk about this week. Government is reopened, having a pretty heavy impact on the markets, and we will show you what that means coming up. Just like so much of what has been going on this year, when the government actually shut down, that last day was here late September, early October, right about there. A lot of traders and investors thought, well, this market's going to be tanking. The market depends upon so many things happening with the government, not only spending, but information releases, reports, and other critical factors that help keep this big, burly system running all the time, I suppose. And yet the market set a new high here, another one here, all-time high here. And that's really been going on since all the way back here in the tariff lows. If you recall, the sentiment during the tariff situation in March and early April was almost 100% in the professional and media class that was the end of the world as we knew it. And, well, they couldn't have been more wrong. Okay, so a little while ago, we have this yellow line that we've had up here for quite some time. I still believe that is the, yellow line in the sand. The market stays above here, and it has been last couple of weeks. It looks to me as if there's another opportunity to push to a new all-time high before we see 2026 officially rung in. A little below that, maybe 1.5% below that level, and it could be quite a while before we come back around to new highs. Here is something interesting, though. Ever since the tariff lows, the market has not spent more than 10 days after pulling back before seeing a new rally or all-time high once you got to this point. This is something new. October 29th was the all-time high, and now we've had, I believe, 12 days. So this is the longest period of time that we've had without either a rally or a new all-time high, again, going back to the early April tariff lows. It is a little interesting, though. Here's last Friday. That's November 7th. Market got hit a little bit, and yesterday's selling. Government reopens. Thursday, they're selling. Friday morning, they're selling, but then late in the day, decent rally to bring the market pretty much to flat. And if you go down through all the sectors, some of them were down a little, some of them were up a little. The Dow got hit. However, the Dow is the only major index to see an all-time high in the very recent past. NASDAQ came back to positive territory. Russell 2000 is slightly positive. So kind of a mixed bag. But Friday morning, though, things look like the cliff was getting more and more enticing, and the lemmings were willing to keep jumping. Somehow, some reason, some why, the demand stepped back around, and the bulls bought that up. Crypto didn't quite see the enthusiastic buying that some of the other tech areas and the broader market did on Friday. Bitcoin trading at its lowest level. You got to go back a while here. This is all the way back in April. And it's now below the 200-day moving average, below the 50. The 50-day average will cross below the 200-day probably by Monday or Tuesday. That'll bring out a lot of news. Oh, a death cross. I've seen plenty of death crosses that the very next trading day result in a pretty wicked rally. So I wouldn't put too much weight into that. However, it is still happening. This whole entire, it's an asset class now. This whole entire asset class continues to stay under pressure. But in certain situations, this is possibly leading to a decent buying opportunity. I'm not one of these creepy crypto nuts who says that Bitcoin is going to hit 200,000 by the end of 2025. But I do believe over the next 20 years, an investor, and in this case, I would count myself an investor, not trading. This is an investing type of discussion with Bitcoin and the creepy cryptos. I believe that buying it today and constructing a little bit of activity around that investment for the next 20 years could lead to a 20 to a 25% annualized rate of return without really too much effort. And that's a Warren Buffett style move if you look at his long-term record dating back to the 1960s. Well, there are no major earning reports coming out There is. There is one big one. There is one. We'll get to that in a second. Next Fed meeting, I believe that's going to be December 10th. That's going to be interesting because they're going to be without some of their data. They talked about, the White House said something on last week that October CPI may never even be released. We saw a slew of Federal Reserve governors talking from mid to late week about a decreasing possibility of a rate cut in December at this December meeting. Poly markets, the other predictive markets, Kalshi and the others out there. Last week, they were 95% sure that we were going to see an interest rate cut at the December meeting. Now it's about 50-50, depending on the market, some 48, some 52. But let's call it a coin flip there. That's a pretty dramatic difference. And this is based on what some of these people are just saying. There's no change in the evidence, obviously. There's no change in the data, obviously, because the evidence in the data, we don't have it. We haven't had evidence and data for several weeks during this government shutdown. The only thing that I'm looking at really severely is the 3-month government T-bill over here, and it's suggesting no change. Oil prices are suggesting no change. So perhaps they're not going to lower interest rates, although I just can't picture what that would do to Trump. He might go apoplectic. Not sure if old General Romulus was saying that word right. Of course, Latin being my native tongue, you can excuse that, right? Okay, we're almost done here. So I mentioned no earnings except for one, and this is how we'll wrap it up this week. What do you think? Technology, the number one performing sector so far for 2026. And NVIDIA is not the number one technology stock, although semiconductors are doing quite well as a group. NVIDIA is having a good year, though. Not one of those 3 or 4 or 500% return years, but it is having a good year. And it is now the most valuable stock, the highest market cap rated stock in the entire world. So a lot of eyeballs are going to be pasted here. When? I'm glad you asked. Here it is, this Wednesday night. This is a company, though, unlike an Apple or a Microsoft, which when they come out with their earnings on a Wednesday or a Thursday night, it's like right at 4:01 Eastern time. And then there's a conference call and things. This isn't like that. NVIDIA, it says Wednesday night. It could be 4:01. It could be 4:35. It could be 5:15. The conference call could be a little bit later. One of the things I've noticed, this is about the only thing that I've torn into so far, the last 4 earning reports right here, stock fell a little bit. Not a whole lot, not a disaster, but fell a little bit. Here, went up a bit and then fell a little bit before resuming its uptrend. And then here, continued kind of falling a little bit for a couple of weeks, maybe a month and a half or so. Back here, so this is the 4th one. Whoops, you can't see that on the screen. Here's the 4th one. It goes down for maybe a week and a half, and then another couple of weeks prior to resuming its slight uptrend. So back here again, that's 5 earnings reports. Let's keep going. And here's 6. So for the last 5 earnings reports, the stock has come down anywhere from a little bit to more immediately following the report. And that's probably going to look as be a surprise to a lot of traders. However, it's still going to be the most talked about situation until Thursday morning. Okay, well, that will do it for our presentation today. Thank you so much for joining me. I am General Romulus, and I'm excited to come back again. A few more days. Why don't we talk Thursday or Friday after the NVIDIA earnings are out and see what that does to our trusty stock market. See you later. Bye-bye.